use case for blockchains is currently trading. With daily volumes of over $5 billion, digital currencies are proving that they can play ball in a highly regulated field. Matthew Leising of Bloomberg will try to uncover the details and how to coexist with the existing industry.
Okay. Hey, everybody. Thank you for being here. We're hoping to have a great discussion about the future of crypto trading and exchanges. My name is Matthew Leising. I'm a reporter with Bloomberg News. This is Ayako Miyaguchi. She is a managing director at Kraken, Japan. That's Alan Keegan, the co-founder and CEO of Omega One. That's Raine Revere. She is the lead architect for Prism from Shapeshift. And at the end, we have Michael Oved, who is co-founder of Airswap. So what's exciting to me about this is how new all of it is and how we can watch people build exchanges and brokerages and all the other stuff that you need for a market. And these are the people who are doing it. They're not done yet, and they're not by any measure, but if we're going to talk about the future of exchanges, to me that's a decentralized exchange. And but what does that mean? So we're here with Michael, and you're running Airswap, which is decentralized. Can you tell us what you're doing that's new and different from what is maybe people know about in the traditional financial world?
Of course.
Is there a switch? Okay, well, maybe, yeah, maybe Raine, you could.
Oh, awesome.
There we go.
This work?
Yeah.
Okay, so first you start with centralized exchanges. So centralized exchanges have been around for, in the modern version, electronic execution venues have been around for, maybe 15 years, let's say. They're really, really low latency. Everything has evolved very rapidly. These are gotten to the point where they're extremely efficient. So the centralized exchanges on Wall Street, they know the state of their network in less than 40 microseconds. So that's less than 40 millionths of a second. And that's really incredible. So when you design a decentralized exchange, you're gonna lose some of the really good benefits of a centralized exchange, and you just need to make sure that what you design is actually going to provide a lot of benefit to society. And what we took with Airswap is we took a strict peer-to-peer design, which we believe is private, scalable, and fair, and allows for users to trade on a global network. And we think that that's the right design for blockchain, and we went through released our white paper that went extremely well. Talk about decentralized exchange a little bit. So decentralized exchange promises two things. Number one, you always have control over your information and your assets. And number two, you can trade on a global network. So this is something that Olaf kind of touched on earlier, which is that I think one of the problems in the crypto space right now is that these exchanges are very segmented. They're very fragmented. So in order to actually trade, you have to connect to a lot of different venues. And so what a decentralized trading platform promises is the ability for people to trade with each other all over the world.
Ayako, you are at Kraken, and can you tell us that's a centralized exchange? Can you tell us how you fit in with your users, and where does Kraken fit into that in the ecosystem?
Sure. I'm going to just talk about who I am, and then I'm managing in Japan, but I've been with Kraken Exchange. That's one of the biggest global exchanges. It's been a while. I've been with the company since before the launch, actually, in 2013. And then also I've been heavily and intentionally being involved with the regulatory situation in Japan. And then I believe we contributed a lot to the ecosystem. As you know, Japan has become one of the biggest market. So, and then now we hear about decentralized exchanges, and then I guess I'm from the decentralized side, and then we'll need to defend.
Are you the man?
Defend this side too, but it's I think for the entire ecosystem, it's good to have both, but also since I've been in the industry for a long time, and realistically, Japan just Japanese regulators, FSA, just announced their stance against ICO last night while I was sleeping, and so every day I'm speaking with the regulators there, mostly for the new regulations they just started this April. So I'm curious that's really the biggest cost for our time and energy. It has been
Is regulation.
regulations.
Interesting.
So to scale, originally Japan decided not to regulate the space back in 2014 when the industry groups like Japan Blockchain Association now was working with them. And it was great, but then it kind of stopped for the industry to scale because all the financial institutions now actually feel more comfortable working with us because it's regulated. So I think that's going to be my biggest question, and then could be a challenge for decentralized exchange, as much as I also would love to support the idea too.
And Michael, you touched on this, but it feels like something that differentiates you guys on stage here is the idea of custody. It's who controls the assets. At Airswap, at Shapeshift and Prism, and on Omega One, the users are in control of their assets at all times. At Kraken, if I have an account there, you are holding my cryptocurrency and my money, and that's something that you control. So in thinking of this and the new decentralized exchange idea that's really kind of brand new, it feels like you're giving custody back to the users, which it feels to me very rare in the traditional financial world. Like if I have an account at the Chicago Mercantile Exchange, my futures and my cash are under their control, and they decide whether a trade is good or whether it's busted. In a decentralized world, you don't have that. So is that what you got? Was that a motivating force here, was to kind of give custody back to the people who want to use these markets?
Yeah, and I think what allows you to do that is really blockchain technology, which is very powerful and beautiful. And on top of blockchain, you have smart contracts, which allow you to write atomic swaps. So you can swap into or out of an asset immediately. There's no settlement risk. There's no clearinghouse. There's no exchange to do the margin or the settlement, anything
And
like that.
it either works or it doesn't, right? Like that's the idea. So there's no broken trade. Like it's immediate, either yes or no.
Exactly. I think one thing you do bring up that's very interesting is trade disputes. And if someone makes an error, like in the case of Knight Capital, for example, you don't want the firm to necessarily go bankrupt just because of an error. I don't think that's totally the design behind the intention behind immediate settlement. So I think that there's going to have to be some sort of balance between trade dispute and atomic swaps. There's going to have to be some sort of creative solution around there.
And Alan, you guys are working as an agency broker for folks who want to trade crypto, but they don't necessarily want to do it themselves. They'd rather pay you to do it, and you don't maintain custody. How do you guys think about that? And
So there's an interesting thing in the spread of technologies like on the table right now that we're looking at, where there's a lot of stuff about the development and maturation of the infrastructure for trading cryptocurrencies that is unique and special. The ability to have like a peer-to-peer decentralized network, the ability to do atomic swaps and non-custodial exchanges. And then there's a lot about it that really isn't special and is very normal. The kind of starting with bespoke deals, moving to little black book brokers, to more electronic brokers and centralized exchanges that start out fragmented and then kind of centralized. It's interesting because as far as the maturation of the space from the dimension of who the players are and who's involved, and getting the more institutional money in, going from, now there's family offices who have no fiduciary duty buying, there's alternative hedge funds with open mandates, but it will take a while and it'll take more solutions on having higher liquidity lowering counterparty risk and like establishing compliance like best practices to get the more institutional money where you get into college endowments and pension funds and et cetera, et cetera. There's ways of solving that both with the new technology that exists and with the old technology that exists. Like those are all problems that have been solved with traditional market infrastructure. And it's a question of what you want to like pick from each of the things in order to try to achieve that. For example, counterparty risk, you can solve counterparty risk with a non-custodial trading system. Or you can solve counterparty risk at least as far as being able to have people come into the space by building up institutional credibility over a long period of time and being viewed as a low enough risk counterparty that people are willing to play on your thing. You can solve liquidity by what we're doing, taking the trades, aggregating liquidity across exchanges, executing across all of them, or by trying to attract as much liquidity as you can to your platform, whether it's centralized or decentralized, and whatever limitations come with those. And then the last thing on the compliance and best practices thing is that's kind of a space-wide mission of creating what it looks like to be a compliant holder of cryptocurrencies so that institutions kind of have a playbook to run by when they want to put money into the space.
And I would imagine the comfort level that you bring to some of the institutional and more traditional investors is we're an agency brokerage. You know what that is. You use it for all sorts of other assets.
Yeah.
Now you can use it for this new asset
but we also
class.
are making the decision to do the non-custodial wallets in order to have no counterparty risk. And that is something that requires a little bit of explaining. So we're kind of picking and choosing from what we know about the development of market infrastructure in previous assets. It doesn't look that different in a lot of ways. And then the application of blockchain technology that we actually think solves the most important problems for adopting the institutional money.
Okay. Raine, what you guys are doing at Prism is allowing folks to trade a large basket of cryptocurrencies. What's the need there? What problem are you solving?
Sure. So Shapeshift, of course, has built its model around this non-custodial, or at least like very minimal custodianship. You send in one asset and you get another one back, and if you don't get it back right away, you know there's a problem. So there's very little room for things to be fudged. And Prism, the product that I helped create, is an asset portfolio. So it's like a basket of currencies. And this time we went really a completely decentralized route, and the entire system is built with smart contracts. It's a little different than some of the other products represented here because it's not meant for high volume trading. It's meant to have a portfolio that you intend to be exposed to for a significant amount of time, 24 hours plus. So some of I think the harder challenges for decentralized exchanges in general come from that high volume environment and the different ways, the different risks that can happen there. So Prism is somewhat immune to those things, okay. But it takes advantage of using smart contracts, having a little more of a runway for time, and having a fully decentralized system.
And so you're offering a way for people who maybe want to hedge or all at the same time have a lot of strategies going on in one place.
Yeah,
okay.
Yeah, that's right. And it is peer-to-peer because these parties interact with the smart contract, and it's a fully collateralized contract. Yeah. And the beauty of that is, right now we're all imagining these crypto assets, and that's what's making all this possible. But the way that Prism has been designed is that it actually works with anything with a price feed. Right? If there's a price on something, then two parties can come together and bet on whether that price is going to go up or down. Right. And that kind of level of interaction, which is common within the derivative world, is really powerful.
Okay. So we talked about the power of a central exchange, and sometimes it can work in your favor if there's a fat finger order or if an algo goes nuts. In 2013, Goldman Sachs algorithm went crazy and they sent a whole bunch of options trades, kind of blew up the market. A lot of those trades were broken. Or take Coinbase earlier this year when the Ether flash crash happened. If your stop orders were triggered on the way down, you're going to be pissed off. Are you? So, but the exchange can step in and say, okay, we'll make you whole. Is one of the risks that there is nobody there for mistakes? And how do you guys think about that in your business plans when it's going to happen? Somebody puts in the wrong key or something happens and it's kind of like, well, I didn't know who I was trading with. Who do I even talk to?
Yeah, there's a few different things we've thought about, I guess, and those are very, very valid concerns. You want to ultimately ensure that your participants are trading in a fair and orderly market. You want people to be able to be guaranteed that they're not going to go bankrupt if they make a mistake, and mistakes happen all the time, especially when we're in an algorithmic trading world, which we are. I mean, 90% of stocks are algorithmically traded right now. So I think what this is going to end up looking like for the exchanges that have a lot of algorithmic flow and have a lot of retail flow and a lot of institutional flow is it will be a hybrid of decentralized, and parts of it will be governed, which ultimately is centralized. You might need to have bonding systems where people who are trading on the platform bond money, and if there's a dispute, that can be used. The bond can be used in that dispute. That's one of the things we've thought about. But yeah, I mean, it's certainly a very interesting question. I think that going fully decentralized right out of the gate is going to be very difficult for people to really swallow.
Ayako, have you, as Kraken, ever had to bust trades? Does that come up? Did something go wrong on Kraken ever, and you said, okay, no, we're actually not going to allow that one to go through?
Something went wrong with
Yeah, a mistake. Is that ever happened?
or on our side? Not really, but the tokens what we list always have challenges, right? Even though we select our the list of tokens very, very cautiously, it's not really easy to be listed on Kraken. I get these requests every day, but there are things that we can't really predict in advance, whether it's Ether fork or even like Bitcoin. And then for that, it is really, in order for us to maintain the business, it's really the business decision at the same time, like for the long-term profit and also sustainability, like why do we need to stop funding now? So we make that decision often. And then again, like I'm not personally against the idea. I mean, like I'm a huge fan of the word of decentralized. That's the reason why I'm in this. But realistically, in order to make the business, that's what we have to be very responsible for everything we have as our business, like all the tokens that we have, even though we are not the one who created the token.
And there's an interesting thing about the question you asked, that's not really not specific to like exchanges or trading platforms. That's just a question about decentralization. Like what does it mean if you have a fully decentralized thing and then you're a company that isn't, and also like what are the benefits and like losses of having a centralized authority you can reason with in unexpected or bad outcomes versus having something you can't reason with, like you have the blockchain just doing its thing.
Yeah.
So that's kind of a really high level question that applies to basically every kind of decentralized application you can create.
Yeah, and then it seems like with you guys, you don't have user accounts and there's maybe no physical location. Are you getting feedback from regulators on how they're starting to think about this? Has anybody reached out to you, or what's the state of play there?
We haven't, I guess, directly spoken to regulators yet. We plan to, definitely. Is this on? Okay. We plan to definitely engage with regulators. But if you think about it, at the core of it, this is not, a decentralized exchange isn't an exchange in the classical sense of the word. An exchange is somewhere where you go and you meet other people, and then you trade, and then the clearing is done by the exchange itself. So in this case, you're just doing a peer-to-peer trade where it's me selling something to you, and you just do an atomic swap, and it's basically more akin to, let's say, selling something on eBay versus going and trading something on an order book and having a margin call and having to have that trade actually cleared properly. So I think it doesn't. I mean, this is my opinion. I don't want to speak for the lawyers that we've been working with, but I think that this kind of falls into maybe some sort of new territory that isn't quite an exchange and isn't quite nothing.
Yeah, and I want to jump in on that just with this idea that this is new territory, right? We constantly need to remind ourselves that this is a new world, it's a new economy that we're helping to create. And so one thing that's really different, I mean, we're talking about exchanges and these really traditional financial entities and part of the financial ecosystem, but this is different. This isn't just a new technology that's been introduced to Wall Street. So I don't think we should think about it just as a innovation in exchange technology. There's a beautiful ethos within the blockchain community that is asking the question, how do we change the world? And so there are internal questions to how exchanges should operate and how to prevent front running and how to provide this fair system. But I think we should also continue repeatedly asking this question of how does the financial world, how does the world of finance create a better world, not just create centralized wealth? If we use decentralized tools to amass central wealth for whoever it has the most knowledge and access, then I think a lot of us haven't achieved that vision of blockchain.
That's a great point. At the same time, though, I'm sure you want to be as broad as possible to who the audience that you're speaking to. And so the more people you bring in, the maybe less sophisticated they become. And that's when regulations and you know, the idea that people sometimes need to be looked out for a little bit so that they know that, you know, the playing field is safe. So I think it's a balance that everybody must strike. But I think it's also an interesting point Michael made. You know, maybe think about the equities markets. There will be a dark pool. There will be the New York Stock Exchange. There will be a call-around market. You know, it's a mix and match. It's not like one of you guys needs to be the be-all, end-all. And it seems like, again, to what I was saying, it's fascinating to watch this being built kind of before our eyes.
Right. Also, to that point, and looking at the space and talking about different technologies that are being created and whether you try to shoehorn the technology you're creating into a pre-existing regulatory framework or apply new regulation or any of that stuff, there is a fundamental potential here it is a technology that can be the new pipelines for capital flows in the world, and how those are built, the kind of outcomes that creates are sort of yet to be defined. We're hitting a lot of constraints right now in capital allocation, just global capital allocation, with like trillions of dollars in nearly zero yielding bonds, and then other people in different countries having no access to capital, even if they have like a great idea and a great investment. So there is sort of an opportunity here to reboot the fundamental pipeline, replace the technology on which capital is allocated, and at the same time sort of change the ethos and the outcomes. Which is, it's important not to like try to shoehorn the things that you create that is like a peer-to-peer, totally decentralized trading network into saying it's an exchange. Like it's a new, different thing.
Yeah, and just to add to that, the current financial system we went through in 2008. I was on a Wall Street trading desk in 2008, and we were a small company, and in order to trade in the FX markets, you essentially need to trade through what's called a prime broker. And what a prime broker means is someone that's AAA credit rating. They can never go bankrupt, right? And they're only able to trade with other prime brokers. And this is centralization at its finest, is because in order to trade in the FX markets, you can only trade through these 8 to 20 or however many there are prime brokers. And we actually traded and cleared through AIG. And when Lehman Brothers went bankrupt, a lot of people don't know this, but AIG also went bankrupt for probably 24 hours until they were bailed out. And that was fucking terrifying, right? And that was, you think like the whole world is basically, because these financial systems have just basically frozen and no one can interact with each other, no one can trade with each other anymore, all the money flows in the world have just stopped because of centralization. That's something that we have the opportunity right now to change. And that's really incredibly inspiring and beautiful thing to be working on.
not to, for the audience to misunderstand what I meant. Like, I totally agree with what Raine said. And then also, every day we actually have heavy argument with the regulators that things don't work that way. And so I think still the education is very important to, because they always think in the way that it has been this way. And then it's just that it does defeat the purpose. So we, as a centralized exchange, or like as a person from the industry, I'm being really trying to kind of listen to their language, but at the same time, this is a new innovation, and then they can really think everything in their language.
Yeah, it's excuse me, it's made me think that in that, sorry, go ahead.
So every day is really like, I would like to say it's positive fight, but I'm also like in charge of Mangok's
Half fight, half education.
bankruptcy proceeding, talking to the trustees of the Mangoks, and then it's hard when I, like in this technology world. So, but they need to learn this so that we can get there, and that's our goal, I think.
And to Alan's point, peer-to-peer is great and new in this world. In traditional finance, maybe we don't have the right word for it, so we shouldn't call you guys an exchange. Traditional finance, that's the over-the-counter market, right? So maybe here it's the over-the-blockchain market. I don't know. But it's a...
And also, the thing that, like, coming out in this, like, there's a really interesting thing in the space of, there's an idea of building the new financial system. And part of that isn't making the peer-to-peer networks. Part of that is onboarding the capital and centralized exchanges. There's this whole stack of things that have to happen. Sorry, that's all I was going to say. But.
All right. Well, keying off of a question from the last panel, I wanted to ask each of you, what's your biggest frustration right now? What's the wall you're hitting that you wish you could get around and that would help you move forward the most? You can't say regulation because you already said that.
Frustration?
Uh-huh.
Oh, well, it's hard because that's the first.
There's nothing else. Everything else is awesome.
It's going great, but actually, Raine and I were supposed to hijack this panel. It's not frustration, but I want to say at the end that, great things are happening, and I'm also like personally doing things, starting new things to use this technology for social impact. And then when talking to the frustration side of people, like I'm trying to talk about something positive from this technology. So I don't know, I'm feeling late every day, so it's
good.
But doing this frustration side as my job, but I think it's getting better.
Alan,
so.
It's a really good question, and I'm actually thinking about it. I'm not sure this is really appropriately characterized, but I feel like my biggest frustration is communication, because the way to like efficiently share ideas in the space, to efficiently explain things to people, has to bridge so many different levels of knowledge and so many different subjects, where for all the projects that we're involved in, there's people that you talk to that are very sophisticated in the crypto space and not very sophisticated in the financial space, or the other way around, or neither. And some are both, but then some other thing that's involved in the project you're doing. There's such a multidisciplinary aspect to a lot of things that we're doing. It can become very difficult to convey what you want to convey. When speaking to regulators is just an example of that, or institutions, or just folks that you want to partner with, all that.
Yeah, you should sit at my desk for a day and
I can only
get the
imagine.
questions I get from my editor.
Yeah.
Raine, you want to chime in on?
Yeah, my biggest frustration, which it's funny to call it a frustration because it's the thing that gives my life purpose, right? If there's something that's frustrating enough, then it's worth working on. It's worth working to change. So having been in the blockchain space for a couple of years now, I'm more and more confused as to how there is so much awareness of this vision of a decentralized economy, and instead of having power focused on a few financial entities or governmental entities, decentralizing that, removing the intermediaries, how that is so well understood, and yet talking about decentralizing culture and talking about increasing access to more diverse populations and imagining a financial world that includes more, it is a hard leap for a lot of people to make. So it's both my biggest frustration, and it's more and more the reason that I'm doing work in this space.
Cool. Yeah, and I would say there are new challenges every week. Every week is totally different. I mean, we just went through our token launch for the Airswap token. That was probably one of the more challenging things I've done in my life, / crazy things I've done in my life. 72 hours of no sleep, but incredible experience, and we were so humbled by the support we got all over the world. And you know, now the challenge is, I wouldn't call it a frustration, but the challenge is for us is growing the team, and we're aggressively looking for talent. And so if anyone is interested in working with Airswap, come find me.
Great.
All right, that's all the time we have. Let's give these guys a big round of applause.